I think it's really, Tesla has not skipped a beat on execution. The Tesla team is doing an incredible job across the board in execution. So it's really, can't say enough good things about the Tesla team and the progress that's being made in terms of fundamentals. With respect to sort of global demand, I just do want to really emphasize, and I'm not trying to say that this is the only reason, but it is certainly the primary reason, is that when interest rates increase, the cost of a car increases along with it. So the radical interest rate changes that have occurred have increased the prices of all cars, actually new and used. I mean, you can see like what a bath Carvana and CarMax are taking. This will be true of anything bought with debt. So there's that's on the demand side. Is the interest rate changes by the Fed, and then everyone's basically forced to follow the Fed. So you've got Europe raising interest rates, even Japan raising interest rates. So now, and in my view, I've said a bunch of this already on Twitter. In my view, we are already in deflation. So the Fed is just dealing with old data. So then if I'm correct that we're already in deflation, the real rate of return of T-bills is insanely high. It's arguably above the long-term rate of the S&P 500. It's arguably above 6% real rate of return on a T-bill right now. So so you got two things that you get a double whammy if you're selling a product that is bought almost entirely with debt, like a car, and you have the risk-free rate approaching or so potentially exceeding the risky rate of the S&P 500, and that's why you're seeing a lot of pretty smart fund managers out there shorting the S&P 500. I'm just laying out what I see as just this is my best guess at the future. It's not like I have like some incredible crystal ball that is an exact predictor of anything. So with all appropriate caveats, but the reality is, if we are in a recession, I think we are in a recession, and I think 2023 is going to be quite a serious recession. And it's going to be, in my opinion, comparable to 2009. I don't know if it's going to be a little worse or a little better, but I think it's in my view likely to be comparable. And that means demand for any kind of optional discretionary item, especially if it's a big ticket item, will be lower. And then with the Fed increasing rates, which is really, this is quite unusual. This is like when you're heading to a recession, you should be reducing the Fed rate, not increasing it. So that amplifies the difficulty. So now you have sort of structural demand, which is obviously going to be lower in a recession, and you amplified the effective cost of a car because they're almost all bought with debt. So now you get a double whammy, is what I'm saying. So then the obvious choice in that scenario is: do you want to grow unit volume, in which case you'll have to adjust prices downward, or do you want to grow at a lower rate or go steady? It's sort of a choice there. My inclination would be to still grow. My bias would be to say, like, okay, let's grow as fast as we can without putting the company at risk, which would mean, in that scenario, profits would be low to negative during a recession, provided the cash position is okay. I think that's still the right move long term, because there's also something that Tesla possesses that other car companies do not, which is extremely fundamental. That is that the cars are upgradable to autonomy, and and arguably, an autonomous car is worth many times what a non-autonomous car is. So even if your margins are extremely low in selling the car, the subsequent upgrade to it being autonomous is worth a lot. So, and that's something that no other car company can do. Is only Tesla can do that. So I think that so that you know so like if you say well, I mean, I stand by my prediction that long term, that Tesla will be the most valuable company in the world. I'm actually fairly confident that will be what happens. What I cannot predict, because there are many things outside of my control, is what will be the valuation along the way there. So that is subject to the stock, subject to a lot of emotional elements on the stock market, subject to macroeconomic conditions. But if say like long term, I would say Tesla's probably, in my best guess, most valuable company in the world in less than 5 years. Well, the thing is that if you look at sort of automotive demand almost anywhere in the world, it's problematic almost anywhere in the world, and not everywhere cares about my political comments. So that I think this is of really of minor impact. Really, this is not. I really just don't think this is a significant factor.
Yeah.
Like the thing that I think most people are just not realizing is just how I sound like a broken record on this, but how big of an impact a Fed rate level is of this on the order of 5% is if we are in a deflationary environment, which I think we are in. So and if I look back and say okay, what are actions that could have been taken? What was there something that I failed to do at Tesla that could have been done and would have improved our execution? I literally cannot think of a single thing. I'm just telling you, factually, if you since the vast majority of cars are bought on credit, the interest rates are a high real interest rate is literally just like increasing the price of the car. So in order to keep demand constant, you would have to therefore decrease the price of the car. It's the only that's if you want to keep demand constant, and if you want to increase demand, you have to decrease the price of the car further. This is like Econ 101 stuff. So that's the situation we have. It's kind of blown my mind that the Fed has raised rates so high. They're just dealing with old information, and it's like basically like the economy right now is like a car, driving around on a cliffside road, and the Fed is driving it by looking out the rear view mirror. In fact, it's not even looking at the rear view mirror. It's looking at a video taken out of the rear view mirror that's like 3 months old. So obviously, this is not a good way to drive a car in a windy cliff road. So they're just very old school and traditional, and I think we're in for a hard landing. That's based on it's like I said, you have to think for argument's sake, if you have a risk-free rate like that is higher than the return on the S&P, which obviously has fluctuations, why would anyone have stock? Exactly. And so probably what's going to happen, it sounds like, based on the Fed signaling, is they'll increase rates by another 50 basis points next month. And then my guess is they'll, again, it's not like I have a hotline to Jerome Powell. If somebody knows Jerome Powell, please tell him to stop raising interest rates. This was insane. But like I said, the thing to appreciate about interest rate increases is the double whammy effect of, if you're looking at a stock price, is higher interest rates will reduce the profitability of any company selling something that is dependent on the price of debt, like because cars are bought with leases and loans. So people look at their monthly payment, and so you have basically a demand slash profitability issue with higher interest rates, and then which then reduces profitability, obviously, and then in general the valuation of all equities drops with the increase in the real interest rate. That's the double whammy effect that I'm talking about. Now this will not last forever. They'll I mean, I don't know. Hopefully, they'll see like, okay, they've gone too far, and then start lowering the rate. And then it's a question of, well, at what rate do they lower the rate? How long does it take them to get the rate back to something sensible? Yeah, I mean, look, this is like not the forum to make product announcements, but you know, we're obviously want to make more affordable cars. So. And the Tesla product pipeline is awesome. I think Tesla's got the most exciting product roadmap of any company on earth by far. Um, I think Tesla's positioned better than any other car company by far. And like I said, the fact that the vehicle is capable of autonomy with a software update is gigantic. A gigantic thing. No one else has that. So. And we also, are starting from a position where our gross margins are higher than I think anyone else, which gives us more room to lower them and maintain or increase demand. So now, does that mean that the profits are a pretty picture in like a 2009 style recession? Of course not. That's just not physically possible. And there's no human on earth or me or anyone else who could change that. The public in general, and I think it's quite useful to get the message out. Obviously, it's basically being on Twitter Space and then being able to sort of see the Twitter comments, the written comments at the same time, I think is Twitter at its best. Yeah, I'm not selling any stock for, I don't know, I'd call it a minimum 18 to 24 months. So you can count on me like no stock sales till probably, I don't know, 2025 or something. I need to sort of sell some stock just to make sure like there's like powder dry that, to account for a worst case scenario. I won't sell stock until, I don't know, probably 2 years from now. Definitely not next year under any circumstances. I probably not the year thereafter. So I just really want to make sure that I'm somewhat paranoid, having gone through 2 really intense recessions.
I totally understand that.
There's not a single important like Tesla meeting that I've missed this entire time. So it's not like I'm totally missing in action. Literally, if I think like, is there anything that I could have done in the past like few months that would have helped with Tesla's execution? I literally can't think of anything.
Right.
So, and there was not a single important meeting that I missed. It's we're making great progress on future product development, and it's really just like I think there's going to be some macro drama that's higher than people currently think, or higher than most people think, and it's hard to predict exactly. Economic prognostication is fraught with difficulty, but if we do have another 2009 situation, that's the stock prices of everything is going to be lower, and then I think it's arguable that stock prices of anything that's bought with debt will like not a staple, like it's sort of it's like buying sort of food at the grocery store, people will still buy that, but things that are bought with debt, like basically housing and cars are going to be the 2 biggest,
right,
are really going to just get disproportionately impacted. there's a natural economic cycle that happens, and frankly, we're overdue for a recession. Um, it's like shocking that we haven't had like a serious recession since, recession in any meaningful sense of the word since 2009. That's like 13 years. Like, wow. Um, so this is like it just economic cycles are just the way the economy works. Like you have up and down cycles, and it's just the way things go. So we're somewhat overdue for that. Brett Johnson, who's the CFO of SpaceX, and he was telling me about when he was at Broadcom in 2000. And Broadcom was Broadcom's a good company making good products. It's not like Pets.com. So and I was like, yeah, it's pretty wild how when there's like when there's panic in the stock market, like how much even high quality company stocks can drop. And he was like, yeah, when he was at Broadcom, the stock dropped 97%. I was like, wow, that's a lot. That subsequently recovered to, I think, above, its previous all-time high. But, when there's extreme panic in the markets, like things can go to like ridiculous levels. I'm not saying that they will, but this is a thing that has happened in the past. That's why I've been very much encouraging people to avoid buying stock on margin, and just avoid margin debt, because you just don't know if there's going to be some panicky situation in the stock market. I think Tesla will weather what I think is an upcoming economic storm maybe better than any company.
For sure.
But apart from like like I said, if a company's like making like bread or something, they'll probably be they're like relatively recession proof. But compared to any company making large complex manufactured objects that are bought with debt, Tesla, I think, will do relatively better than anyone. But that doesn't. It's sort of like if you're a ship in the storm, even if you have a really great ship, you're still going to get bashed by the storm. So
Yeah.
And there is with respect to cost structure somewhat of a lag effect, where the supply chain takes there's latency in the supply chain. So the supply chain will take a bit longer to reduce costs than we'd like, because there's, I don't know, called 6 months of latency in the
Right,
supply.
right.
It's like if I had a perfect crystal ball, that'd be great, but I don't. The price of battery grade lithium is obviously insane, and it's constrained primarily at the lithium refining level, much more so than at the mining level. And that's why Tesla's building a lithium refinery in Corpus Christi. So is really to get out away from that choke point of, or diminish the lithium refining choke point. Like lithium is extremely common. It's everywhere, basically. It's not like oil. Like oil is much more localized and rarer than lithium. Lithium is basically everywhere. So maybe we're diluted, but we're aiming to be have meaningful volume out of that refinery in like 2 years. Well, we're also doing the cathode refining, but that's like pretty obvious, because it's like there's a giant building on the other side of the Giga Texas factory. That giant building is the cathode refinery that we've been building. So
Awesome.
and that's obviously for nickel-based cathodes. So we're like, I think, taking the steps that are necessary to enable very high volume output of vehicles, electric vehicles, and stationary battery packs, and to reduce our dependence on the supply chain. So like I think we're making the smart strategic moves here. Depending on like what happens with total automotive demand, or especially electric vehicle demand next year, especially in China, where they make the most number of EVs, I think we probably see some reduction in the cost of battery materials. Yeah. Well, I mean, we're actually, I'd say, we're applying capital at pretty close to the fastest rate that we can spend capital and not be wasteful. So we're not like saying, oh, let's like not spend money on important long-term projects. Like I just mentioned, like the lithium refinery and the cathode refinery, which are important for long-term, high growth. So we are making these investments, and we, I can't sort of say too much about this, but we are close to picking location for another gigafactory. But we want to be sort of careful and deliberate about that. So there's a lot of good things that are happening. But like I think the smart move is we're coming into this like recession. I think in a very strong position. Like we don't have any debt. We've got on the order of $20 billion of cash and cash equivalents, and that's a pretty great position to be going into stormy waters with. But like I think we want to make sure that like let's just see like how stormy are these waters, and are we talking about a mild recession, moderate recession, severe recession? We don't know yet. So I think it's not like we just want to keep our powder dry and see what kind of economic environment are we going to see in 2023. The board is very open to doing a buyback, but I think it's like we just want to. It wouldn't be smart to do a buyback and then discover that the recession is like, I don't know, for argument's sake, worse than 2009. And I'm like, that was foolish to have used up cash reserves for a buyback in the face of a severe recession. So we just need to kind of see what is the nature of the recession, and then if it's looking like, hey, we're doing okay from a cash standpoint, and the stock price is like absurdly low, then at least my vote on the board would be to sort of do a buyback. But that's that's subject to the rest of the board's opinion as well. But my vote would be to do a buyback if once we are able to properly calibrate the scale of the recession. And just make sure that Tesla is healthy, and we're not, spending cash reserves and putting the company at risk. Let me tell you, the Tesla team is kicking ass, and like honestly, to use an anachronistic analogy, Tesla is firing on all cylinders. So it's the actual execution of the company is I think outstanding. The team's doing a kick-ass job. So it's like just I guess like Warren, because this is a sort of thing where I suspect Warren Buffett's going to be buying a lot of stock next year, because if a company has like very strong fundamentals, but then the market is doing some short-term panic situation, obviously that's the right time to buy stock. And like I stand by my prediction that Tesla will be the most valuable company in the world. I'm actually pretty confident that will be the case, but I just can't predict with accuracy the stock price between now and then. Well, I mean, Twitter. I and Tesla have long used Twitter, frankly, for free to advertise Tesla. So like my account and the Tesla account have been incredibly effective in building awareness of Tesla and actually driving demand. I think there probably are some synergies there, where Twitter can be helpful, perhaps even more helpful to Tesla. Sure. Well, I mean, the overarching purpose of Tesla is to accelerate the advent of sustainable energy. And and there's like just really three pillars to sustainable energy, which is sustainable energy generation, primarily through wind and solar, and then storage of that energy stationary battery packs because of the intermittency of wind and solar, and then electric transport. And those are the three core pillars for a sustainable energy future. And we're working on all three. So, and I'd say like the demand for large stationary battery packs, especially at the utility level, but also at the consumer level with Powerwall, is like quasi infinite. Like meaning like it's assuming the economics are compelling to utilities for and so like as long as like say a Tesla battery pack is cheaper all things considered than say a natural gas peaker plant, the demand is like gigantic. I wouldn't put a value of 0 on it. It is like, I mean, I've said before, we really want to be doing, 1,000 plus gigawatt hours a year of battery packs, combined stationary and vehicle, and if not 2,000. So, it's big numbers. At some point, like I do eventually need to do this like Master Plan Part 3. The Master Plan Part 3 is just about scale, and just like people, just like one shouldn't even think of things in terms of like dollars. You need to think of things in terms of tonnage, like what tonnage of battery pack is needed. Like the fundamental rate limiter for humanity becoming self-sustaining from an energy standpoint is how many gigawatt hours per year of battery pack can you make? That fundamentally sets the rate at which humanity can transition to sustainable energy. Is how many batteries can you make per year? At the ton, what's the tonnage? Well, in storage terms, how many thousands of gigawatt hours per year can humanity make? That's the faster that ramps, the faster one can get to a sustainable future. And our rough back of the envelope for transitioning civilization to a fully sustainable energy economy is around 300 terawatt hours of installed capacity ish. I mean, other people may come up with different numbers, but it's not an order of magnitude higher than that, and it's not an order of magnitude lower than that. Look, I don't know what my insight into the Fed's decision making is 0. So I don't know, I don't know anyone on any of the people on the Fed board. I'm not sure I've ever even spoken to them, so I don't know what the Fed's going to do. I've been surprised by the rate increases, and like I said, I think they're looking at like data in a kind of a legacy way with that where the data's got a lot of latency, more like and so then they're just making decisions with data that's really stale and not reflective of the current situation. That just means their reaction will be delayed. So they're raising rates more than they should, and then they'll probably take longer to lower the rates than they should. That's based on the past track record. Thank you. I guess my parting words were like there's stormy weather ahead, but then it's going to be sunshine thereafter. I mean, we're on V11.2 with the limited beta. But so it's probably like, I don't know, 11.3. It's pretty soon. It's not like far away. It's measured in single digit, like sort of in the like the thing about the V11 is like, there are a bunch of neural nets that are architecturally much better than 1069, but they like they've got much more room to improve. Like it's, we're just autopilot has been going through like a series of local maximums, and so when you exit a local maximum, you first go down before you go up, and so neural net architecture in V11 is actually much better, but it just takes time to hone the details. But it's like, I mean, it's rare for me to intervene at this point when I drive around. It's like, so it's surprising to like the vast majority of trips that I take on autopilot are zero intervention. Every new neural net architecture is more generalized than the last time. So it actually ends up solving not just, say, extended unprotected lefts, but it ends up solving a whole bunch of things. So it's not like it's actually with each major rev, there's more and more generalization of solving what is effectively the real world AI problem. And Tesla is, as far as I can tell, overwhelmingly the best at real world AI. And our rate of progress is increasing. So, all right, with that, it's good talking to you guys.